Hello everyone and welcome back to Elliott with some cryptos. It's been a while since the last video and of course we are here again to analyze BTC, and also the Quora INS Cycle team has voted for this time XRP Ripple. So we are of course going to take the educational route. As always, I'm going to show you my counts. Nothing really much has changed when we look at the medium term. But what all want actually to do today as well is just take you onto a quick trip into cycle analysis for BTC, and how come one of the traditional cycle analysis actually suggests that the low might be in, and how come Elliott waves on the other hand, which is the modern more sophisticated, let's say, way of cyclical analysis, cycle analysis, suggests otherwise, based of course on guidelines. So it's going to definitely be an interesting one, so hold on there. And if you have of course any questions, don't forget that you can leave your comments on YouTube section and I will get back to you as soon as I can. Also a quick mention, I have joined a competition for an award, and if you do appreciate of course the content I provide here to you for free on YouTube, I will leave some details in the caption, and I would appreciate your vote on a daily basis. Actually, that is, it only takes 5 seconds though. So let's go have a quick look BTC and then XRP, and let's not forget, none of this investment advice is provided to you purely for educational purposes. So guys, I wanted to start, we are looking at the BLX now so we can see all the data. I just pay attention, these horizontal lines are actually the halving periods, right? I want to start by giving you an idea of how cycles work, okay? The typical traditional way is always from low to low, okay? But I also want to show you the relationship from low to halving, okay? So for that, we're going to start, of course, back in the beginning, which is not much data, to be honest, compared to other assets. This is our low. It took us like 55 weeks, 54 weeks or so. Actually, I should really tend to the daily, but yeah, let me just do that because we want to count days rather than anything else. So let's go back here. This is 380 bars, okay, sort of. The from the low, second low to halving is 540 bars. Third low to halving is 512 bars, yeah. And if we take the low, current low, as the low in from now to the halving period, we are also 510 days away, which is pretty much approximately, well, it's pretty much the same as we saw on that particular price action back between 2018 and 2020. So we can see a lot of confluence on here and with that particular, of course, price action over here. Now, if we're going to assume, okay, that this is going to play out, perhaps because we count cycles from low to low, I repeat, we ought to see a crash right at 554 bars. That would bring us to around February 20 or so, February 17, okay? So that's one thing to remember, okay? Because of how synced these two are pre-halving, maybe this is just giving us that sign now. We want to have more of that structure into that structure. So one thing we could do first of all, is just quickly use the bars button to see what fractal relationship we could potentially get all the way to the halving period, and put it out over here. You can of course see again that comes exactly as we suspected. Now you see obviously in the previous run over here we did a much more upside leg, much more upside, but that doesn't bother us because we care about the lows, not the highs, when we look at cycles. The important thing is to look at the 554 bars potential crash in February. Okay, now you might ask, why did I do the previous ones? I want to show you something. I want to show you that there is a relationship on the 4-year or the 4-day, 2-day, whatever sort of cycle in BTC. That means we care about numbers that they are derivatives of 2, like 2, 4, 8, 80, 160, 320. Okay, this for example is 320 plus 40 plus 20, right? Because we always can cut to have these numbers. This is also the expectation when we have a cycle move from low to low and there is like 80 bars, we expect the 40 bars to be the middle of the cycle, and this typically could be the high, but the highs do not matter as much. This is what we usually suspect is going to be the case. That's why I mentioned it. Now 542 is a similar case. Okay, if you've got well, we can quickly do a calculation, to be honest. Look at this. So you would have let's say 400 plus 80, that's 480, plus 40, that's 520, plus 20, plus 2, 542. You see, it just makes sense. Now 454 also kind of makes sense, and this actually is though very, very similar, and this is what we are focusing on now. So this is pre-halving. Now what else we're going to do is we're going to do the cycle from low to low. Okay, now we've identified the cycle relationship, right? So now we want to go and, what is that thing? We want to go and look at the low to low. So one of the lows is here, and the other low is actually down here. This is 1,154 bar, derivative of number 2. So we're looking at 80 and 320, by the way, right? Mainly. The cycles, I think at the S&P is, I think, three bars or 3 years. So just keep that in mind. And then we have another low from the low to the next low. This one is 1432. This one was 1154. Yeah. Now 1432. If we go from that low to the current low, do you see that? 1432, 1434. This is again so close from low to low. So they also suggest that the cycle low is in. So we don't get this on the smaller cycles, we also get it on the larger cycles. And this is very important because there is a fractal relationship, okay? And if there is a fractal relationship between the lows, they might as well just be on the price, okay? Because the lows are time-wise, okay? The pattern pretty much is price-wise, price-wise. You can see, well, yeah. So, that said, we are looking for a potential continuation if we play out something like this, continuation to the downside and then up and then fall down. Okay, let me just do this one more time. If that were to play out, we would get something like, oh, I think I've done that wrong. 1 second. And there. Hello. Yes. So this could be an expectation for this price action. I wouldn't move it there. We're gonna go and do the top over here, bring it to the previous one. So price action, price was, we might just continue to fall, do a leg to the upside, and then just crash in February, from there continue low higher. Okay, this is sort of the parenthesis I wanted to do. And also the same relationship is valid for, if you add the crossovers for 320 and 80, you also going to find out that there is some sort of relationship with the moving averages before, in terms of when they happen, okay, the cross, before the halving and after the halving. So from a cyclical point analysis, guys, this like says the low is in. Now what BTC says here, I mean, you know my count, you know this is an expectation for me that we've got an ABC, right? So why do I mainly support that case is because we have, well, actually there's many reasons. One is because we have a 5-wave leg to the downside, typically followed by another 5-wave leg down. The other thing is the correction in wave 2 is very deep, okay, and the correction in wave 4 is shallow. That's why I'm still looking at this as a 5-wave leg, whereas some other analysts say this is 1 and 2, this is 3 and 4. This is not so typical to get 2 very deep corrections, because this correction would be deep if you take into account, you know, if you see that, hold on, the low over here, you know, we came down 50%. So 90% and 50% is not so typical, okay? It's a guideline, of course, of alternation that is called, but it's what it is. Now, when combined with a 5-wave leg to the downside, to me, this is what it looks like. Yeah, expanded flat possible because you have the wave C here, but if that was like maybe 61.8%, let's say maximum 70, but not all the way down to 90, 85%, whatever that was, then this is a bit of an extreme case even for a guideline. Okay, apart from that, let's not forget that the Elliott waves, the basic cycle, is using Fibonacci's, because you go from 5 waves to 5 and 3, 8, then you go 8 and 5, 13, 13 and 8, 21, 21, 13, 34, 34 and 21, 55, and this is how it goes. This is a Fibonacci series, right? And this is how we also count the waves as we go up. You know, so it's a bit of a different method, more advanced, I would say, more sophisticated and more modern. Okay, so I'm not saying that we are going to use that and then not use the other one, because the both kind of work. I'm just saying that one method suggests one thing, the other method, based on guidelines and sort of analysis, suggests another low is due. Okay, so we have to. I'm like split between these two, because the cyclical relationship that we see versus the previous run is just alarming. It's striking, I would even say. Now, as we are here, let me also show you something else. If we assume this is the beginning of the leg to the upside, and then the low is here, the first low from low to low, and we're going to go higher from here. This is 206 bars. So you got 80, 160, and 40. Also makes sense for that to be an actual low. Okay, but why not 320? And that will be the low in. You know what I mean? So we might just see something like this. Who knows? And we're going to get the low here, perhaps, you know, as we were explaining before. And this is my expectation, by the way. So let me just go to it straight away and explain what and why. So this is where we have left a while ago, right? I mean, the kind of structures that we currently see, they're a little bit odd, okay? And we're in no man's land currently, to be honest, you know, with what is really going on. Price action doesn't provide any signals, but well, according to the medium-term stuff, you know, I am expecting that to potentially turn something to something like a deep correction. Okay, deep correction that finally is going to give us wave B, because, well, maybe we do have wave B down here or even down here, but so far, because we haven't really gotten a deep correction, we aim to see that one being the one. To be fair, this is, 1, 2, 3, 4. If a wave is here, we did a decent correction in wave B, but how likely is this to be a primary wave B and this correction an intermediate wave B? It's a bit unlikely. This is the reason, because we measure the corrections as well. It's not like, if you just measure this correction starting from here to E, this lasted like 48 bars. And then we're going to go and assume that there is another lower degree correction that is 62 bars. It's 1.5 times bigger, nearly, so it's a bit unlikely. With that said, no, A, B, and C, which means expectation for running expanding flat and any clusters are quite good levels to stop thinking about getting in. 20k becomes one, 61.8 and the 200 Fibonacci. The 2385 as well, it's one, and also the 161 and 50 is one. All of them are actually, which adds to the conviction. Okay, so if we continue to fall, probably first wave finishes around 2670, correction up to 29, below 30. Third wave down to around 138 or so. Fourth wave up there. Fifth wave here. Okay, that ABC finishes around 22k, perhaps an extension down to 20, then we'll go up for wave B. If that happened, we can make a base case quite speculative for a 40k wave C correction end. Okay, and that is the expectation. But then if that were to happen, I'm going to go in the short term later. Well, maybe our wave B already ended here, right? Because here's the thing, this correction, this correction in wave B, it's longer and bigger than the others. Correctively speaking, right? If this is A and B, we've only corrected like 35%, which is not really ideal. But let's not forget that B waves correct anywhere between 38.2 and 61.8. Sometimes they do 35%, sometimes they do like 65-70%. So it ranges. It's not as typical, but it's very likely to be a case. If that's the case, we're looking for a much more extended leg to the upside. That will also increase the chances of the low being in. Okay, it would increase it, obviously, because in that case, our expectation for the 100 extension would be up at 50k. This is 10k higher, you understand? And getting at 50k, while the top is at 69, this is a deep correction, considering, we would be like to the 79%. Literally, it's a cluster, and 79 for a wave B correction. So if we move up from here, trouble for bears for sure. And also, and of course, assuming you've understood that I didn't have anything there, but this is the very same sort of idea that we have from the low. Okay, so this and this, it's the same expectation from the low. Okay. So what is the difference here? Well, here, guys, we've done a 50% correction at A and B. And this is 1, 2, when I get then 1, 2, 3, 4, and 5, we'll continue higher. So you've had an ABC here as an ending diagonal, and then this is again 1, and we're going to get 2. Obviously, as I said before, if this is A and B, maybe even A and B, who knows, just to give it a bit more, I don't even know what, but anyway, the thing we don't like here is that, again, this takes way more time for that compared to these 1, 2, and then 1, 2. So maybe who knows, maybe this is 1, 2, we're going to get 3, 4, and 5. That's going to be like an ending diagonal, and from there we'll go down, who knows. But anyway, the idea here is that this is wave 1 and we are correcting still in wave 2. Okay, of course, let's look at the alternatives also as well. You got the W, X and Y potential. Okay, a much more deeper move to the downside from where we are. Similar expectation, medium term. There is also this scenario. It would be an ending diagonal correcting. It's just it doesn't have that right look. So, you know, you got a double Z, which is W, and we would get X up at 79. That could potentially go, and then another leg to the downside for Y. Looks like I'm one. Oh no, I'm not. I thought I'm off one thing. But again, it has similar implications as with the other counts. That, you know, the correction in a like smaller degree is lasting longer than the higher degree correction. And one of the scenarios is, of course, that we are just going to go up, and this is the low, and this is like 1 and 2. And I mean, it could really be any of the scenarios that we looked before. Instead of A, you assume a 1, right? But also, if this is like the case that we typically do follow the volume 1, 2, 3, 4, and 5 would be also possible, and this would be like 1. I don't think so. It would be too deep for wave A. And I would expect that, of course, to be a running flat here, so we don't overlap with wave 1, or perhaps a triangle, so again we don't overlap with wave 1. Okay, and then another wave to the upside in 5. Of course, it has to be smaller than wave 3, and from there a correction and further continuation to the upside. Yeah, let me just go quickly in the short term. Do I need to show you the short term? Let's just see here. Okay, let's just look at this here quickly. Okay, so here's what I'm expecting. Where am I on this? Am I on this? Okay, well, wave 1, wave 2, and then we expect this 1, 2, 3. We expect this to end as a triangle, continue lower because we don't want the overlap or not. So it's like 1, 2 here as well. Wave 1 is not finished yet. What else could happen is that this could turn out being an actual diagonal as well. And diagonal could suggest two cases. One is we stop here and we'll go lower down and we'll do what we expect for a primary wave B correction as a 5-wave leg in wave C of an expanded flat, or we go up, correct, and continue further up, which means this is wave 1 and this is wave 2. As we saw at the two other cases, of course, where wave B was here in one case and in the other case was down here. Okay, now let's go to XRP. When we look at XRP, I'm going to go out on the daily. Well, this is the main count. You know, obviously there is a lot of data on the left side here, which this particular chart doesn't include, but it doesn't matter. Maybe I should change it at some point anyway. My expectation: 1, W, X, Y, X, and Z. I don't like it though, guys. I will tell you why. I don't like it because we have a double top here in the X's. Okay, so although I'm showing you this because I don't want to change it while you're not following my videos, because the last XRP video I did, it was the same count, right? I just want to leave it so you know what was the previous count, and I won't speak about what I'm leaning towards. Okay, I'm leaning towards this actually being a W, X, and Y here. Okay, what I mean, get it? And of course it wouldn't be a W, X, and Y. I'm just gonna make that change now, since you can all know what I'm doing and why. And in here we are going to put a W, X, and Y in the intermediate degree. Okay, and yes, it is of course possible. It's just that yeah, it's a double zigzag in a W wave. So it would be A, B, and C. Hold on. the something is missing here. So okay, let's turn this to minor, and that should make more sense. And that would be A, B, and C. Again, we turn it to minor. So you got a simple zigzag W, and then W, X, and Y. Well, it could simply be A, B, C, D, E here, to be fair. Wouldn't it? Yeah, it can just be an ABC. ABC. Oh, I see why it's A, B, C, D, E. A triangle, yeah. Well, there we go. And W, X, and Y for W, then the X, and then the Y. And you might ask why. Well, it's because, guys, this wave X has come actually quite high. Okay, look, we have actually done the 61.8, and I wouldn't want that to be a double top with two primary waves. Actually, that would be an intermediate, and this intermediate would be like kind of lasting much longer than the primary wave. So that's why I'm making the change now. Okay. Now, being here allows us to, well, if it's W next, actually, we would just assume this. But the thing is, I'm just not sure that wave to the upside has finished. Okay, so this is one of the, this is the main, of course, but also I want to introduce you the alternative, which sees it as a W, X, and Y, as we were looking before, instead of an ABC, which means the low is in here. This is 1, 2, okay, and a running flat, and this is going to continue higher. This is an actual very bullish case as well, because you got a running flat, you expecting that to extend higher, then continue higher, correct, and go much higher. Okay, so from this perspective, we could have put that over here, the wave one there, and just expect to see whether we can just break outside that channel once again. Okay, and now let's go to pay attention a little bit to the short term as well. I want to also make the change down here. Let's do it so we are correct with all the changes we do. I don't think we have finished up here. I will explain why. That would be primary, sorry. Well, that would be minor, and then that would be W and X and Y. Let's take this off. Intermediate. Okay, and it looks like W, X, and Y here or not. I don't think it really matters. What is important is that we've got yeah, maybe we don't want. We've got that all sorted, and we've got the ABC. So if it's this W, X, and Y, we could potentially even go and hit 79 before we fall. Okay, so now looking at this from that perspective means that if this is W and X and Y for W, then wave X in primary wave is an A, B, and C, and this C wave is an open ending diagonal. And once we finish it, if we haven't finished, we're gonna go all the way down to get a W wave Y. Sorry. So over here, because this is a regular flat, guys, we've come quite high, okay, to expect another leg to the upside. But because of how this structure looks, you know, because we have to have ABC, ABC, ABC in all of the particular cases. So you got something like, you know, hold on, A, then do the B, and then you've got something like of an ABC here, and then 2, and another ABC, and 4, and then another A, B, and, you know, if you count 1 and 2, that is 3. So we need the 4 and the 5, right? So that is the only reason that I think we might see another upside leg before we fall. So if 1, 2, 3, and 4, I don't think 4 is finished yet, then 1 more to the upside, and from there start falling lower down. Otherwise, guys, well, 58, 60 has to hold if we see a correction. It has to hold because, let me just repeat, it has to hold because otherwise is going to come and invalidate that impulse to the upside. So this like level has to hold, otherwise it's like, well, we finished that top potentially, and then that's going to be it pretty much, and we're not going to expect another leg up, or that would equally decrease the chances of seeing also the alternative play out, which is the bottom is in and we're going to move higher up. So that's all. I hope you enjoyed the video. Thank you very much for watching. Let's not forget, I will leave some information on the caption for the vote in the awards I joined, and should you be able to support on that cause, it would be appreciated. Thank you and take care.